Sweet. All right. So, what I'm going to talk about today is just creating like your playbook and being super clear on your setups. And I'll show you an example on how I write mine up, and you can just make it your own, honestly. Before I go into that, I'll go into the feedback or the update with the strat for Brown and everybody else. So, you guys can see my screen, right?
Yes.
Cool. All right. So, with the strat, all I've been doing is trading it literally just how I trade options. All I do for the most part is my first entry is always on the 4 hour time frame, preferably with no gap up or down. If there is a gap up or down, then that trade is void. Then I'll go into TTOs, which I'll talk about next. But essentially, through some practice and back testing and live trading it, for YM, I've noticed that when the 4 hour triggers, a good area to have a stop loss is about 50 points. Generally, it doesn't pull back that much to stop you out. Sometimes it will stop you out here and there, but from what I've seen, a 50-point stop loss is pretty good for YM when you're taking it off the 4 hour. Now, of course, you're more than welcome to use MYM and increase that stop loss, whatever you prefer. I've just seen success using the 50-point stop loss when the 4 hour triggers. Something to keep in mind is it has to be on regular trading hours. So you can't use electronic trading hours for those who love ICT and all that other stuff, which is fine. But for this specifically, it has to be the 4 hour time frame with regular hours on. That's my first trade that I'll take on the day. So on Friday, while I was a little salty, I didn't catch a good chunk of the move. I still got 100 points. I usually aim for 100 points max on this specific setup on the 4 hour. Generally, with the strat, we know that the previous candle highs is our target. So I could have been aiming for this instead. But with two YM contracts, I was happy with 130 points. So that works pretty well. And then the next portion is when we're looking for TTOs. That's pretty much all I look for. And reversals are, yeah, reversals off of broader informations as well tend to work well too. Preferably off a hammer reversal or reverse hammer or shooter reversal. You can take a regular like two down, two up reversal off a BF. I just personally prefer it to be a hammer or shooter candle just to get a higher probability trade. Momo hammers work well as well. So we had one, I think it was Thursday. Hold on. Oh yeah, yep, Thursday. So this, for those who don't know what a Momo hammer is, that's like a strat setup where the trend is bullish and then you get a hammer that prints in the direction and then you just go long as soon as it breaks that high. So those tend to work pretty well. Generally, I put my stop loss under the setup candle, which is the hammer. For this specific one, I did not because that is way too wide for me. That's like a 95-point stop. But it did hit some targets over here when it took out these highs. So I trimmed some and then it took the rest of my position off at break even. But generally, when you get a Momo hammer, it doesn't pull back like this. It just keeps on going up, similar to like this candle. So you get like a hammer and then a big candle up. This one pulled back and then continued up. So going back to the TTO, TTOs are essentially just pullback in the direction of the trend or corrective activity. So you'll see a pattern like this, and it forms kind of like a triangle, and then it keeps on going up, as the name suggests, triangle day out. So we have one right here on YM that I took on Friday. We get the push up, push down, and then the continued move up. Granted, this specific one here had this big push down and then it continued up. I did take the same setup on Thursday, which was it was right here. Yeah, this one right here that I took. Took the move up, pushed back down, and then it kept on going up. And you can see the difference here. This one kind of, while it does go up and complete the TTO, it comes back down and pretty much erases all of that before continuing up. This one right here, when we get the push down and we go long above this, either the 3 candle or the 2 candle, it kept on going up, small pullback, and then just kept on rocketing up. Generally, this is what it would do. This doesn't happen too often where it'll complete and then a big red candle would kill it and then keep on going up.
You may have to move further left.
If somebody's talking, your mic is super low, unless that's just background noise. Any questions on that before I start the write-up? All right, looks like no questions. So with the strat, just to summarize that small bit, TTOs are super easy. Same with the 4-hour entries. Again, if you are going to use the 4-hour entries, regular trading hours on the 4-hour, I like to use a 50-point stop loss. You're more than welcome to extend that, and you can size down using either 1YM or an MYM contract to get a wider stop, whatever works best for you and your risk tolerance. So when it comes to creating a playbook, for those who are not familiar with what a playbook is essentially just a collection of trades where, we back tested them enough to see that they are valid trades. And from there, we just collect the data on them, and you can put it in a folder if you want. You can keep it on your chart. Honestly, really whatever you want. Let me see if I can bring up my other screen. Give me a sec to show you guys. One sec, I have like a billion screens up or windows. All right, so in my playbook, I have losing trades, ones that are essentially just poor. And then in my winning trades, I have them in folders. It's like my Momo hammer setup, retracement, bullish TTOs, bearish TTOs or H patterns, so on and so forth, kid and play model. And pretty much I just get the screenshot, as you guys have seen before, that I posted in the group. Let's move this over. So I'll write up what the setup looks like and what I need to look for to make it a valid trade. And then on top of the picture write-up, I also like to have a video that I record of myself explaining the setup. That way, anybody that I show this to, or if I need to go back to it myself, I have an idea of what the overall idea of the setup is. Because while the picture does tell me what it looks like and what to look for, I can give myself more information with the video on the concept behind it in full. So this is essentially how I have it set up. And of course, you can make that your own, whatever works best for you. Now, when it comes to the setup category, for me personally, the winning trades in my playbook that I take, after I back test them, I'll probably look between like 15 to 30 different trades every time I've seen it. And then I'll calculate, all right, this one won, this one didn't win, so on and so forth. And then I'll categorize them somewhere here in A, B, C, or unknown. So let's say, for example, the tweezer model or even like the kid and play model, I would probably put into the A setup because usually, while they don't come that often, the win rate when they do appear are is pretty high in from what I've seen, and the risk reward is high as well. And then the B setup, I'll probably maybe stick in like a continuation trade or and not really continuation, maybe like a W. To me, I'll probably put in a B setup because sometimes while we do print it, it doesn't. Sometimes I lose on that more than the other setups, so I'll probably put that in B in my experiences personally. And then C setups for me, I don't even bother with this. This is like if I take like a regular, two up continuation off the strat or whatever I'm looking for. So anything that's in C or anything that's in the knowns, I don't bother trading any of these because it's not profitable for me. And that's how I like to categorize it. And then when I'm writing it up, and we'll do a TTL example here. Let's let's use this version here since it's cleaner. Actually, let me see if I can find a cleaner version. Let's check the 15 minute. 15 minute might have a good. Oh yeah. Yeah, this one's perfect. All right. So for me, step one is always going to be the daily 4 hour and 1 hour trigger in the same direction. In this case, for this example here, there's going to be a bullish version. So I'll do, uh, let's make sure we're on the same page to be bullish. Do long version. And let's go back to this day so I'm super clear when I get back to this. All right, we had a gap up that day. So this is the 4 hour trigger, and then this is the daily trigger. And the 1 hour is obviously going to be bullish, so I'm not going to bother writing that out. Let's go back to the 15 minute. All right. And I'll just point to that because, I already know that the 4 hour and daily and stuff by these lines here are telling me that we're bullish on those time frames. And then step two would be, let me see if I can make this a little cleaner. Let's move that there. Probably have to organize this a little better later on. Step two, pull back in the opposite direction, as we can see here when we get this pullback. And then for step three, we're going to take, this is going to be our entry. Step three is going to be the reversal back into continuity. So, oops, can't spell. Which we can see is right here. And then I guess I can use step four as our targets. And where is my There we go.
Quick question. Will this always be like on electronic hours or regular hours, or does it matter for this setup?
This specific one you can find on both from what I've seen. We can switch to electronic and you'll still see the same thing.
Okay.
And then once I have a write-up similar like this, pretty simple to follow, at least for me anyway, since I already know what it is. And then I'll just add a note section. Some people, you don't necessarily need to have those three time frames in your direction. That's just what I prefer for the higher probability versions. If the 4 hour and daily are green, but the 1 hour may be red for whatever reason, you can still take it. Again, I'm just super picky with my trades. So I need to have at least those three time frames in my direction. So this little note here, because some people might say, oh, do I need to look for a hammer only? But it could really be anything. It could be the two down, two up, as we can see here. You even have another TTO that printed up here, as we can see. This was the following day on Wednesday. This one here was a 2-1-2 up that you could have taken. But again, it really doesn't matter what strat setup it is. It can be a 2-1-2 up. It could be a two down, two up, a 3-1-2, a 3-2. Honestly, doesn't matter. Any questions on that? Making sense? Need me to clear it up? Is the write-up easy to follow?
Yes, sir.
Cool. And then for the bearish one, it's just an H pattern, as we can see over here on the right side. Literally just the same setup, but in reverse. You get the push down, push up, continue, move down. Same thing. You take this fail two up, two down reversal, and you enter in right here. Ooh, I forgot to mention my stop loss. Why is there we go. So in this case, if you want to see visually what it will look like, whoops. Uh, where is this? So my stop will be like this. My max target would be up here at the completed high. Something to note, you can leave a runner position because usually for this specific trade model, if it's valid, it's going to continue higher. As we can see, even for the bearish one, if it's a valid one, it's going to break that low and it's going to continue lower. Sometimes it'll break the high and then immediately just reverse back down to a low of day. But generally, if it's a valid TTO, it's going to continue higher for the rest of the day. So this is what it would look like with the profit and loss thing to make it a little easier to view. Now, some people may like to use their stop loss under the setup candle or the trigger candle, which is the two up. I personally like to give this trade model a little more room to breathe because sometimes it'll trigger you in and then come out and stop you out, and then just continue going up. So this is how I would prefer to take this trade, or, with my stop loss anyway. And you can adjust that. Trade said he would use a stop at 30 points. Yeah, you can use a 30-point stop loss if you want. For this specific model, me personally, I wouldn't use a like a fixed stop loss because every setup is different, right? This specific one for me has a 47-point stop loss. If I go to this bearish one over here, I'm going to enter in there, and this specific one is going to have about a 49, 50-point stop loss, right? So it's going to vary from setup to setup and how big or small the candles are. Even this one, we have another one right here with a 3 up. If you miss the 3 up entry, you could take the 3-1-2 up. So this one here is a 48-point stop, and the high will be about 33 points. And then you see it can just kept on going up for the rest of the day. Granted, it did flush at the end, but so. Oh, real quick, this is a Momo hammer setup right here, a better version. You get the 2 up, hammer prints in the direction of the trend, keeps on going up. Cool. Any questions on that? What time frame is the best for the TTO? I personally look for it only on the 5 and the 15-minute time frame, but it'll appear on any time frame. Let me save this real quick. What day was that? July 16. So it can be found on any time frame. So even if you go to RTY, if you go on the 4-hour, we just have a gigantic TTO here that it hasn't completed yet, as we can see. So push up, push down. You could have gone long on this 3 up. Granted, I'm not going to swing trade RTY, but if you trade options, you could have taken this on IWM. So IWM, you could have went long here. You could have been aiming for these previous highs. I guess you could use that one, this, and that as targets. And what? This is on the second, third day. Day 1, day 2. Oh yeah, that's easy, like a 200-300% trade on IWM on that swing if somebody took it. Do I look for the setup every day? I would say so. Generally, if it's going to be a trend day, a TTO is going to print. We just have to wait for it. And sometimes it'll give you multiple opportunities if you miss it. Oh, the 4-hour real-time hours. Uh, yeah, pretty much. I always look for the 4-hour for my initial entry using the regular. Did I miss this text? Let's put that in there. Yeah, so for the 4-hour, if there's a gap up or down, then I'm explain to them why it can only be real-time hours. Great question. So for those who are new to the strat or don't know about it, it's pretty much we only ever use regular trading hours. We never use electronic because your time flips are going to be different in the sense of the 4-hour candle for real-time hours start at 9:30 a.m. Eastern, and then the second one prints at 1:30. However, if I'm using electronic trading hours, it's going to be every 4 hours, as we can see here. And you're going to get incorrect, or maybe not, maybe the term isn't incorrect candle patterns, but you're going to get candle patterns that don't match up with how the strat is to be utilized. So as we can see here for Friday, we had a 3-2-2-1. However, for regular trading hours, we had a 2-1-2 up and then another 2-1. So you want to make sure that if you are taking these trades off the 4 hour using the strat method, you need to be on regular trading hours. Generally, for the 5 minute and the 15 minute, the time flips and the candles are going to be the same because they're just in 5 or 15 minute increments. We have another TTL that printed there. There's a big bearish one. Granted, the stop loss is gigantic. I'll probably use like 50% of that candle. Yeah, this is electronic trading hours, and the same setup would appear on electronic. So it doesn't really matter if you're on electronic or not when you're looking for TTOs. And I only trade this during the New York session. I don't really trade anything else personally, but I'm sure you can probably find a TTO during extended hours. This is the afternoon. Actually, no, it's like 2 p.m. I guess technically you can see this as a bearish TTO or an H pattern. It's just not clean for me. Take that down. Get one short right there off that reverse hammer. And then your stop loss would have been up here. Target this. And then you just trim as it continues going in your favor. So you could have went long right there. I'm not saying I would catch 25 points on gold, but with this model, you could catch at least a 5 with a completed setup. Cool. Any questions on that before I stop talking? Oh, also, Temi, you mentioned some other setups that I take is, like I mentioned, the actionable signals off of broader informations. What day was it? I think there was like a failed W that printed. This has to be regular trading hours. If you're using Thinkorswim, make sure that your future setup is set to start aggregation at market open, because you have the 4 hour time frame and you don't have this set up or this checked off, it's going to print on an off hour. Oh yeah, it was this day. So this day here, I had a hammer off the 15-minute time frame, which is pretty much looking like a W with the higher low. This one just failed and it kept on fading down. But I took this long and I was aiming for this broader information as my first target. And then, of course, the center of the W as my second one. In this case, it only hit the first target and then it faded down. And it stopped my position out at break even for the remainder of my contracts. But, you know, broader informations and the hammers or the actionable signals, super high probability. So I would definitely take those. So again, in summary, if you are going to trade the strat with futures, you have to be super picky on the specific trades that you want to take. You can't take those. You can't take it. You can't just take any setup. At least in my opinion, in my experience. The 4 hour is also different on TOS. Oh yeah. Something to mention. Thank you for that, Brown. Sometimes when there is like holidays, I forgot what the last holiday was. TradingView is going to have like extra data. So the candles are going to be different on the 4 hour and even potentially on the 1 hour and the higher time frames. So keep that in mind. I remember I was talking to Brown like 2, 3 weeks ago. I forgot what holiday it was. and oh, I think it was like July 4th or something like that. And the candles were showing up differently on Thinkorswim because their cutoff time is different than on TradingView, on what TradingView gives. So keep that in mind. Why is this showing my volume? I don't use volume anymore. But yeah, Tammy, like even this one, I think I took this one. I could be wrong. Actually, well, this was Friday. No, I didn't take this. I did see it on IWM though. So even right here, off this broader information, as we know, we just take reversals off of them. So we have the bullish move up. We had a 3-2 continuation or a 3-2 reversal off of this level here. And you take that down to the previous candle lows and then use the broader informations as your targets. So you could have went short 2274. First target 2266. That's about 8 points. And then 61 from entry. That's what, 12 points. And then 74. What's that? 16 points to this third target. And even here, you get this hammer. Kind of didn't close above it, which I prefer, but you could have taken that reversal back up, aim for the previous candle highs and the BF. Would have been a nice trade. So just be super picky with your setups. If the stop loss is pretty wide, just use the micros so you can, still take a similarly sized dollar loss, but you have more room to let the trade breathe. Cool. That's pretty much all I have on the strat and creating your playbook. Any questions on that or on anything that I went over? Cool. Of course, Brown. I will leave it up to the next person. Welcome, Timmy. Oh, word. Ace is teaching. I think he's in here too. Yep, he definitely is. Sir, the stage is yours.
What's going on, y'all? All right, bet.
Can you be quiet? Please be quiet. Shush.
You saying hi? Okay, you saying hi?
Whoever has an iPhone, your mic is hot. Mute yourself. Or Kels, you can mute iPhone 101.
Yeah, somebody, can you guys hear me?
Yes, sir.
Somebody want to go before I go so I can get little man situated? Yeah, okay, buddy. Yeah, and then I'll come back up.
Yeah, definitely. And anybody can participate. This isn't just like me, Kels, Ace, Brown, etc. Anybody can talk here. This is a, like open forum. So whatever you want to share, we're all human. Don't be embarrassed. We're all here to learn. Yeah, we can definitely do trade reviews as well.
Well, I guess, I mean, just for me to open up a discussion, um, I called it one early this week because I was irritated as far as YM leaving those equal lows. And every time I tried to target it, of course, it didn't want to go down there. So I was just like lost in the motion of the trade of where it wanted to go back and forth. So I think for me this week, it was just staying on a higher time frame, mainly like the 4 hour, because even the 15 minute and the 1 hour was just a little confusing if I wasn't waiting, and I wasn't patient this week. So yeah, I hung it up early, paper traded, those worked out. But anybody else have any difficulty with direction? I think that was my main thing, direction.
Was that on Monday?
On what time frame for YM?
That was it yesterday or Thursday? Let me see if I still got it charted. And then what did you say, Omari?
I said, was that on Monday?
No, I think Monday I had a clear direction. I gotta see. Let me see. Catch my chart. Second, I gotta find it. Right. My bad, y'all. Sorry. Share screen.
Whoever iPhone 101 is, who said the biggest problem is my analysis is right, but I get wicked out before it goes in my direction. If you trade ICT, the ICT people can give more insight here, but what I like to do is take all my setups and back test them and see what an average stop loss is and what an average gain is. And then let's say if you know for a fact that the setup is wrong after it goes 60 points or more against you, then you can use that as a general stop loss area.
Okay, so it was Monday. I had something else. Monday, I was rolling with NQ and ES. Like that was clear right here in this area. Like Monday, Tuesday, I was looking for that break. I guess it's more to show that one. Sorry, I just be jumping around. So it probably was an NQ. Yeah, okay. Let me just move this out the way. Okay, so this was clear. I was literally waiting. This is when all the drama started on Wednesday. So Monday, Tuesday, I was rolling with that. I understood what happened here because we took these highs, right? And this is just like a setup I look for. So both of them, I saw that NQ tapped into this area, ES didn't, or ES, it was vice versa. But I was rolling with this area. But when it gapped down, I was waiting for the pullback, like deeper into this gap to continue to sell. And it just sold off. So I wasn't comfortable with, I did try to buy it back up into this gap, into here to continue to sell, but it wasn't a big enough retracement for me. So that trade didn't play out. And like I said, I was just caught up in these gaps that it left because I'm like, it got to come back. Of course, I know it doesn't have to come back right away, but I'm like, it broke, like it broke on a higher time frame. Even the 4 hour, it shifted bearish. So I was just having a hard time like forcing my trade because I wanted the pullback instead of continuing to trade to the downside, if that makes sense.
Yeah, it does because
No, it
that's the same thing
does.
I wanted as well.
Yeah, I was just gonna say that. I was waiting for it to retrace back for like a perfect snipe, but you right, it never came back. Like
Yeah.
it literally was just a continuation drop. I'm trying to go back to my trade journal to see where I even got in at, but that was my frustration as well.
Yeah, and then on let me see. Is it this one? So yeah, okay, and that was another thing. So on that daily, it was, I think ES came into that daily. I think it helps if I go back to the daily. So yeah, with this one, Tuesday, yeah. Okay, so ES came into that daily area I was looking for, but MNQ did not. So I was like, okay, I'm rolling with ES. It's stronger to the downside. But once again, waiting for those pullbacks after it broke on the 4 hour, 1 hour, it wasn't working for me. And then I took this one on paper trade yesterday. Like, of course, as the dust settles, it got a little clear. I was still kind of unsure, but it was inside of here that I took it here. So I set this up here and targeted this area here. And once again, it was on paper trade, so I just let it roll. One trade that was excellent for me last week was I don't know if this is gonna confuse you. I don't know if my chart. So we just hide drawings. This still on paper trade, but that was this buy up. I'm gonna show y'all that. My bad. I'm jumping around. I took this sale down from London, this all the way down here. So that worked out. It came to a higher time frame area and it sold. So there were 2 entries that I took on this from over here. In these areas here. So I took this first one, targeting this area here. And then this second one, I called it like the gap session. I wasn't supposed to be trading, just being honest, because it was after the London session that I have here. But I took this trade right here because I saw it on the 15-minute that it did this. Okay. Here. I saw this right here. If I turn it back on, maybe all this stuff will come up. Okay. So that 15-minute close candle right there is the candle I took and then rolled it all the way down to these Asia lows. So that was cool. And then yesterday, once again, like I said, I had hung it up because I was already irritated and at the limits that I wanted to hit for my drawdowns. So I said, you know what? I'm just going to paper trade. And I paper traded this one, this entry here, targeting these highs, this liquidity point. And it hit the target, but y'all can see right here, it didn't take me out of the trade because it missed it by like a pip or something. So it didn't take me out of the paper trade, but nonetheless, it was still my setup. I took it and I left the house. And of course, I was proud of myself after the fact, but I just wish I was a little more patient earlier in the week so that I wasn't able to, shut myself down. But that's all I got, y'all. Anybody else? Or questions or suggestions of how not to get lost? Because I was seriously lost on like MNQ and ES just with the direction because of the way it was just playing around. Nothing? Okay.
I think it's all just a sight thing. You know exactly what to look for. Once you let go of what you think the market should do and just get in line with the flow, I think it will be easier for you to back in, but to jump back in. But it looks like you know exactly what to look for and how to take trades. So it was just all, from what I'm hearing, it's all just a sight thing.
Mm-hmm.
Letting go because we're not the market makers. We just want to swim with the big fishes when they make they move. So that you just gotta like let it go, release it, whatever you need to do, breathe, and then find the next trade entry to get in where you fit in with the continuation of the direction.
I agree. Thank you so much for that.
I second that with ES. Some days you will get, psyched out. That's just how ES plays around sometimes. Because I think I was watching for an entry Friday, yesterday, and I kind of got psyched out or got tired of waiting with all the back and forth. I think it was around 10. That was before the push up. So I end up, getting away from the computer and doing something else. I ended up taking a mentor day yesterday, really, but I was still watching to see if there was any plays available. But some days it's like that, like young lady just said before.
I will say that you weren't the only one. So I had the same issues this week, and what I kind of came to the conclusion of was that I think so. What I took some time to do last night was I took some time to like try and come up with some formulas where I can size down, maybe go back to micros and be a little bit more trickier and allow myself a little bit more room. But that's what I'm working on. I'm going to try and finish it today when I get back home. But yeah, you weren't the only one. Some of us more seasoned people. Well, I wouldn't say us more seasoned. Some of the seasoned people had problems. So I'm speaking for myself. And with that, I think I'm going to try and shave off a day in the week where I can take an extra day because I think most of y'all know that I've been on here that I do this full time. So um, now since moving to futures and have us having the Sunday open and being involved with that, it's like I need to shave something off to make up for that. So I'm actually getting to the point where I'm going to try and compact things a little bit so that I can actually take Fridays off. If we don't have news on Friday, I don't want to trade from now on, probably, just because of how this week kind of opened my eyes to some things.
Mm-hmm. Okay.
But I also want to say too, because we kind of know you trade ICT as well. So even that area is still probably an area that, it'll eventually come back to. We wanted it to come back instantly, but as we both know, as we know, ICT, he teaches the algo. So every area has a purpose. It's either going to get hit on the same sell side order flow, or it's going to come back to retrace into buy side order flow. So it's just when you shift your mindset to understand why price is doing why it's doing that, because you see, like me, you, and Omari had the same wonder, like, oh, okay, why didn't it come back to that? We were just expecting it. So that right there already tell me that, this area is going to be used in the future. If it's not being used now, it's definitely going to be used in the future. So it's not a loss. We just got to constantly just talk to ourselves while we're on the charts. Why didn't price do this? Why is price going there? Blah, blah, blah. So that's also something as well. Just ask those why questions.
Mm-hmm.
And continue to have the area marked because I don't think it's invalid.
I agree. And I know another thing that, would have helped with this is just those low-hanging fruits as far as like those targets that I can see right there, but that was kind of some greed kicking in too, because I'm like, you got to come up here. I'm going to take it there. But of course, it'll turn around, play around by your entry. So it's just like it hit a target. So you should have just took the target. But that was just greed for me. You know what I mean? Like it went to the first target, but you wanted the second target. And it's just like being okay or taking contracts off Or like Brown said, like sizing down in certain plays where I can play minis and have something to take off the table instead of just going with one or two larger contracts.
Sure. Yeah, sizing down is really goaded. I like getting in from the start of the move. So if I get in with a is like psyched out. I know like Avin, he was on his YouTube and he said he don't even blink when, he's in a trade that got him like, rocky. That's
Mm-hmm.
how I be feeling. So yeah, sizing down could definitely help with those psychs. Um so yeah.
Mm-hmm. Okay. Thank y'all. Anybody else got something or want to share?
Hey y'all, this is Artesia. I'm not at my computer right now, but I feel the same way. This week was so weird for me. I think it was Wednesday, just like you say, the start was Wednesday when the dip just kept dipping and
Mm-hmm.
I could not get in. And so I'm trying to, okay, catch the reversal. Is this where I can get in to go lower? And then it kept going. Like I'm in fear. I'm moving in fear now. So my stop is tight and it keeps stopping me out. I literally had like 14 trades. And that's not like, I don't do 14 trades. I do like 3, 4 trades a day and be done. And so yeah, Wednesday I took a loss. Thursday I was even scared to. I was still in that mind frame, like you was talking about the psychology of it. I was still kind of moving in fear Thursday,
Mm-hmm.
and Wednesday. So Thursday I'm trying to make up the gains from Wednesday or make up the losses from Wednesday, and I'm still green for the week, but I literally almost wiped out my whole week, and I was so mad at myself because this is my PA, and now um, we just got laid off in the beginning of July, which I'm happy about. I got a new baby and stuff like that. So I was waiting, but now I need to like show and prove. You know what I'm saying? Like, I'm
Yes.
like, okay, now it's for real, for real. Like, I got to show my husband, like, I could do this, It's not just extra money, but it just sucks so bad. It's like the psychology of it. And that's what I was telling y'all in the Discord, my execution, and then the conviction of it, like the fear of, okay, do I get in now? And then
Mm-hmm.
it dumps and it goes like my direction, or it does what I need it to do. So I don't know like what I was listening to Avin last night and he was talking about the breathing, and I do that, like I meditate, but now I'm gonna start doing, like he said, like close your eyes, breathe during the trade, maybe take a step away. But this week was just so weird with that. Like it just kept dumping. And I was like, oh, okay, it's not gonna go no more. And then Naquisha go to 18,000. And I'm like, this is what I saw. I saw this, but I didn't get in. So I'm just now that's why I was like, this weekend, I'm gonna really try to focus on my execution and what I'm getting into, and just being sorry, just, having conviction with my entries. Um, but I wanted to ask because my go-to has always been the Strat. Failed to up or down on a 30-minute was my trigger. And then the entries I'm looking for are on the 5 or 15. But I feel like I'm missing out on the entries. Like I feel like I'm kind of late to them. I'm not an ICTer, but I understand like sell side. I don't want to be trying to do too much with like information overload, but I feel like my execution needs to be better. And then obviously the psychology of it, I need to like trust my levels and like be able to let the play or let the trade play out, and not move the stop and move in fear. Um, yeah, I just wanted to say that. Like, I feel you with the whole psychology of it. I think so many people, I know so many, even my mentor, she's been doing this like 30 years, but she don't care. Like she make big money monthly. So her stop's wide. She like, I'm just gonna let it play out. Like, no, I can't do that. I can't have just a wide stop and see. So um yeah, I don't know. That's my focus this weekend is really working on kind of like the playbook, like Avin was showing, like, okay, these three setups I see, I'm gonna take. The orb worked well for me during Asia, where I just waited for that 30-minute break and I got 100 points on micros on NASDAQ Thursday or Friday, I guess you could say, Thursday night going into Friday, because I let it ride into London. But I don't know. I'm just looking for really anything that could help my execution and give me confidence to convict better.
Thank you for sharing that, Tisha.
Yeah,
Question:
thank you.
You journal your trades, right?
Yeah, I do.
And before this week, before that, the mental hurdle kicked in. How were you? How well were you doing?
With journaling or just in trading?
Like in your trades, like what were the results?
Um, let me pull it because this week my win rate was 58%. Last week, but last week I felt like it was just printing money. So last week was a good week. Um, let me see.
Essentially, there's a lot to unpack here, but I'll try to simplify it. So it's clear, of course, that what's going on is that you're bringing fear into your trading.
Mm-hmm.
If you are taking the same setups, then if you're changing it up from what you used to do, then of course that needs to be looked at. In this case, there's several things that you mentioned. You just had a child. I think you say you got let go recently from a job, and then you want to prove to your husband, like, hey, I can do this, X, Y, and Z.
Yeah.
The biggest thing that I would say from my experience and the people that I've worked with is you need to do your best not to bring outside factors to your trading,
Mm-hmm.
because
Mm-hmm.
whoever you want to prove it to is irrelevant to the market. The market doesn't care
Yeah.
who you want to prove this to. So we always have to bring ourselves back to, focusing on our process and what we know works. Because what
Mm-hmm.
you're doing clearly works since you still ended up clean, right? Or
Yeah.
green. The only difference that happened this week is that your mind got in the way and started messing
Mm-hmm.
with the trade. So you being so afraid of losing, you cause yourself to lose because of that.
Yep.
So
And went on tilt. I went crazy on Wednesday. Like I know better. Like normally once I'm down, my what I'm comfortable losing, I close it out. But I was like, oh no, I saw red. I was like, I'm about to go in. And so I know Wednesday, just like, the lady was saying just before me, Wednesday, it was like, oh my goodness. But yeah, the fear needs to be removed.
do you use Top Step or
No, these are Apex. My PAs, I got two PAs on Apex.
I don't think we can do this. At least I haven't reached out to Apex to confirm, but you can reach out to them. I'll reach out to them to see if we can. What I always would recommend is that if you do have some trouble sometimes, that goes for anybody that's in here. I know Top Step definitely has it. I'm not sure if Take Profit has it. I gotta ask them. But Apex as well, if again, when I get that answer, I'll confirm with you guys. But if you can set a hard daily loss limit,
Yeah,
that'll
where it
help a
locks
lot.
you. Yeah,
Yeah,
I know so many people with Top Step. I really need to move over. Apex the ghetto, but that's where everybody starts, with the cheap account. So, yeah, I need to see because that would be super helpful if it just locks me.
yeah, because in moments when we're in tilt, like it's super hard to get out of that until like a nuclear bomb goes off, right? So I find for some individuals who when they go on tilt, they tend to blow accounts. Setting that hard stop would automatically, stop it.
Eliminate everything else. Yeah.
Like yesterday, I'm not sure how long you stayed for the trade recap, but when I was recapping that one trade that I was like reviewing the actual video of the trade of that
Mm-hmm.
individual, I had
Mm-hmm.
him set up that hard stop because he's prone to blowing accounts when he goes on tilt. And thankfully, Top Step just shut him out because I know for a fact if he would have stayed on the charts, he would have blown up that account trying to go short,
Yeah.
going back up. So I'll reach out to Apex, see if they have that, because that will definitely be beneficial. Another thing that I'll mention as well is, like I mentioned yesterday, breathing practice, so on and so forth. But when you're in a trade, if you already have a set take profit and a set stop loss, as soon as you get in there with the bracket orders, just if you feel yourself getting emotional, you need to literally just walk away from your screen. Because I had this
Yeah.
issue about 2, 3 years ago. And the way that I got over that, it still comes up here and there. But when it was really bad, like as soon as I'll get into a trade, like immediately like emotional. And I wanted to like move my stop loss up or like
Mm-hmm.
3% on a contract and then move my stop loss up. So the biggest thing that helped me as I like develop that muscle more is as soon as I get in a trade, I set my take profit and stop loss, and then I'll just walk away and then just wait because we did our job. Whether it hits the take profit or stop loss, it's not up to us. And there's only two scenarios: we're gonna win or we're gonna lose, and that's
Yeah.
it. So you messing with the trade before it even pans out in either direction, you're limiting the opportunity for the trade to develop properly. So all that to say, what I would say for you is again, remember that our biggest focus should always be on our system and what we know works. If we approach the day with things in the back of our mind, whether it be, oh, I want to prove to my husband that I can make a lot of money doing this or doing that or X, Y, and Z, it's
Yeah.
better to take the day off and then come back another day that you may be a little better or a little clear headed because that could be detrimental for your growth.
I appreciate it.
Of course. Keep me updated with your progress.
All right. Thank you.
Hey, I wanted to chime in on that. I think on Tradeovate, if you're using Apex and using Tradeovate with Apex, you can set those limits on your account. It's not through Apex, but it's through Tradeovate itself.
Okay, I'll look. Also, since you mentioned that, is there a way? I know I have one Ninja account and I changed my P&L to points. So that's super helpful because I'm not looking at the money. But is there a way to remove the P&L or it's just going to be there?
Yeah, so when you
Yeah,
go through, sorry, go ahead, Brown.
oh yeah, I was gonna say it is there. You just got to go
Okay.
into the settings, yeah, and it
Okay.
has like 4 different options.
All right, I'll do that
And I
too. Okay.
Yeah, and I was gonna second that. I was gonna say that it does. The platform itself is what you can set the lockout in. I believe Ninja Trader has one as well. When I used it, I didn't stay on Ninja Trader long because I'm a Mac user and I got tired of the virtual machine. But I believe Ninja Trader does have one as well. Um,
Okay.
Yeah,
it's based on the platform, not the thing, not the prop firm or
Not the
whatever.
prop. Mm-hmm. All right. Okay,
Yep.
I'll
And
look
then the
for
other
it.
thing. And then only other thing I was going to say to you would be, when I heard you say about the strat and your triggers, in order to help, like, so that you don't complicate things. I mean, it may work for you, but in order to not maybe complicate things, especially on days when you're having difficulty, if you're taking a 30-minute trigger, you don't have to drop down to a lower time frame to find an entry. The trigger on the 30-minute is your entry. And because
Okay.
if you're taking a 30-minute trigger, you're looking for I'm assuming you're looking for a 30-minute target. So if
Mm-hmm.
everything is on that time frame, you don't need to drop down. That's just going to cause you to have to do more work. Just something
Okay.
to maybe look at.
I just feel like I miss a lot of the move. Like, for example, y'all got me looking at YM so I could be part of Young Money Cash Money. But on Friday, let me just pull it up. I'm just on my phone
Asia,
because
I'm
my
gonna, I'm
girl
gonna give
woke
you
up.
your
But
solution to that problem. Stay off the chats when you're trading.
yep, yep,
Yeah. Mhm.
yep.
And
That's
the other
something
thing
I
with that
learned
is
because
the
I
other thing would
see
be. Oh, go ahead.
uh let me go. So Friday, oh, this was right at open though. So Friday, because I try to wait 30 minutes before I make a move. But you see how literally YM just went. Like if I was on the 5 minute, I would have got in. You know what I'm saying?
Yes, I
Like
think
at 9:30 exactly, or 8:30, whatever Central, it just went. It went 200 points. I would have been done. I would have been done for the day. But I waited for a 30-minute trigger. I still got a good trade with YM, but my thing is like that's what I'm saying with execution. Should I be looking at like a lower time frame in the open session?
so.
And
So I took that trade. So I think it was a three. I think it was a 3-1-2 on the 30. At least on MYM. I think it was a little different on the thing. So if you see things like that, you can, when you say drop down to find an entry, what you want to find is the earlier reversal. But you have to remember with the strat is that they're reversals. So reversals start low and come high. The reversal will start as low as
yeah,
the 1 minute and work its way up. So
okay.
if you see you have a 3-1-30 and you're waiting for that trigger, you can look for it you can look for the reversal on the 15 minute. It may be a 2-2 reversal on the 15 minute that will take you into the 3-1-2-30. But you're not necessarily looking for, when you say looking for an entry, you're not looking for an entry. You're looking for an earlier reversal that's going to take you
Yeah.
into your
Mm-hmm.
prime reversal. So that's something to definitely look at. And I
Okay.
took that. And so the thing with it is that, I think Ace is on here. He's going to talk about his thing. And his thing can kind of coincide with the strat a little bit, but sometimes I find even with the strat, and we know strat can be late entries, the strat is an earlier entry for that 30-minute orb. You have to decide if you're going to do the strat or if you're just going to sit out and wait 30 minutes. If you're going to just sit out and wait 30 minutes, no matter what, strat reversals happen in that 30-minute. You may not want to be waiting out the whole 30 minutes.
Yeah.
Because in Friday's case, you missed it. Because as you said,
Exactly. That's what I'm saying. Yeah.
I took the 3-1-2-30 and I made 275 points. I didn't wait.
Yeah.
When
Yep.
the inside bar broke, I got in.
Okay. All right. Yeah.
And I think
Okay.
Yeah, I wonder.
I was out before the 10 o'clock news because I did not want to be in not knowing what 10 o'clock was going to bring with consumer sentiment. So
Exactly. I could have been done. That's why I was looking. I was like, I could have been done. And my goal is to be done anyway by 11 o'clock Central. I'm in Texas. So that's 12 o'clock, lunchtime. Like before all the craziness starts, like I would love to just be done. And I would have been done in 10 minutes, So that was a little frustrating, but I did get Friday was a good day. I was still done, but I got 200 points on the reverse. So after the news, basically. Um, but yeah, thank you for that. So I don't have to wait, or I can wait for the 30-minute reversal, but
no,
I could look on the
it's
lower
either
time
or.
frames.
Yeah, it's either
Yeah.
But
or.
I'm on the 30-minute and it looked like it was an early entry there as well, strat wise, ICT wise, or whatever wise. Like I feel like for Friday you could have got in
I got in, but just it was
early.
after 10.
Oh,
So
okay, okay.
basically I'm just saying I could have been done earlier, but it's fine. I did get in on the reversal entry.
Oh, okay,
Yes,
okay.
I guess the key takeaway from this whole segment with that is the 30-minute waiting does not coincide with the strat. It's got to be either or. If you're doing the 30-minute wait, you're not stratting. If you're
Okay.
stratting, you're taking your classic triggers that your 2-2 rev, your 3-1-2, your 2-1-2, whatever. When that
Yeah.
goes off, if it goes off at 9:32, you're in.
Yeah. Mm-hmm.
Oh, she's referencing 30 minutes for the A strategy, not 30 minutes just her strat time frame.
Yeah.
Right.
And
Oh, okay,
also
okay,
the
okay.
Right,
30
but
minutes.
you can't do both like you said though. You
Oh,
can't
okay,
do both
yeah.
Yeah.
because like
Okay, okay, okay.
Mm-hmm.
you got to pick one or
Okay,
the
I was
other.
confused. I thought she was just using the 30-minute time frame for strat. Okay,
Well,
but
it's
she's
both. It's both.
waiting for
She said
or
both.
she yeah,
She's
okay, okay.
she's
I'm
taking
trying to do
30-minute
too
reversals.
much. Like I'm trying to
Yeah.
do too many things. You know what I'm saying? Like I'm just info overload because like I said, I was shook up this week. And so I'm trying to mix all this stuff, but no, I hear you. Like I just need to stick to the script and, do what I do. And I would have got in. I would have got in right with you at, I think the trigger would have been like 44.43 or something like that. But I mean, I was able to get in after, like I said, it just was late. It was just a later entry.
Now, if you're someone that needs to feed your brain, kind of like I am, sometimes I have to give myself something to do or something to work on. What you can do is in those instances, you will see what you may want to research and go back and look at is say, if I take my classic strat reversals that trigger in the first 30 minutes, does it have a high rate of success or a high rate of failure? And if you find that it has a high rate of failure, then you can abstain and say, I will take the next reversal
Okay.
that happens anytime after that. But you're not per se waiting. I'm just going to straight sit out the first 30 minutes, no matter what goes on. And then at 10 o'clock, I'm going to start looking. No. It's got to
Yeah.
be one or the other.
Yeah. All right. And that's my thing. Like I said, I was just trying to do too much. And I was like, let me just wait. And then had to end up waiting longer because I forgot about the news at 10 and didn't want to get into anything. But okay. All right. I appreciate it.
No problem.
And to kind of tag on to that, I can't really jump on the chart just yet because you hear my 2-year-old going crazy. But with the open the range breakout, I shared the 30-minute strategy because that's just me personally. I like to wait because of the indecision that happens, between 9:30 and 10 o'clock. Prices going up, going down, so we don't know clear direction yet. So I wait 30 minutes. But in the case of like Friday, when you see volume is crazy and you see price pushing, you can jump down to a 15-minute ORB or even get crazy and do a 3-minute ORB. So it depends on what price is doing, what the charts are showing, but then also too, like in the case of Friday, we had news at 10.
Yeah.
So that wouldn't have been a good day to actually do the 30-minute ORB because at 10, price is influenced by news. And so I wouldn't have tried to do that on Friday. So, but there's certain days where it's like, okay, there's no news. There's nothing happening in the market, so price is just pure price action. So then you can take it, and then it kind of gives a clear direction because it's a higher time frame. But then if you're not trying to wait for that, and you see price is actually trending already before 10 o'clock, you can jump down to a 3-minute, 5-minute, 15-minute ORB and try to see if you can catch that break. Because typically, what it'll do is it'll break one of those time frames and continue, and you can go ahead and make your play and get out before 10 o'clock. Does that make sense?
Yeah. Oh, for sure. Yeah. I appreciate everybody. Thank y'all.
You got this, one day at a time. Keep it simple.
Yeah, I don't even, and don't shun me when I say this, but I don't even trade Strat or ITC. I stick with simple support and resistance, open range breakouts for some strategies, and then what I'll do is, I know the market likes to do, it goes from liquidity to liquidity. So I'm looking at imbalance candles and order blocks and watching price go from top range to bottom range, which probably has some concepts with like ICT and Strat, but I just keep it simple because if you have too many strategies, then you really can't be a master at any. You're really average at all of them. So if you have less strategies and you're focused on those specific strategies, then you can become a master at those.
If that's what's simple for you, that's what's working for you. I know I see those screenshots. So If that's working for you, keep doing it, because it's definitely working.
Yeah, I think that's a good thing to always remember. It's like if it's working for you, then just keep on doing that. There's always going to be like a shiny new toy, a new setup, a new this, a new that. It's just really just keeping it simple and just sticking with what works for you. You know, one of my students, all he does is just trade the 4 hour initial entry on YM, and that's it. He doesn't do anything else. He's been green the whole month. So, you know, for me, I think I do it too much sometimes, like all the setups that I have. So I try to keep a little more relaxed. But again, you could take one or two setups and that's it, and you'll be fine. So, you know, as you mentioned earlier, Artesia and Ace, you know, when we try to see what everybody else is doing, it takes us away from what we're doing and what works for us. And everything works, honestly. It's really just finding out what works best for you. For me, ICT is great. I just prefer to be a little more relaxed with the strat because I just get in and I could just walk away. Same thing for ICT, but at least from my eyes, it requires less analysis. My 2 cents.
Yeah, I was gonna say that you definitely gotta know yourself. If you're somebody who, again, we all know ourselves, at least we should. If you're forgetful, if you don't retain information, you get frustrated easily, it needs to be as simple as possible. And if you're that type of person and you already got something that works, you don't need to be looking for nothing else. Because it's just gonna be detrimental to yourself.
And then you realize it's all the same thing.
It really is, because I was reading a post online yesterday where they were showing how the Strat and ICT is kind of like they were translating it what we know it as in the Strat, what ICT is, and it was a kind of mind blowing. But if you can retain it and you can see both, great. But if you can't or you're struggling, at some point you have to give up the ghost and say, I need to stick with what I can see easy. When you flip the chart on, you need to be able to see a trade instantly if there's one there. And if it is, then that's what you go with. If you can't, but you want to learn something else, but you still can't see it, you're forcing yourself to see it, it's not going to work. You're just going to waste a lot of time. That's why, like, even ICT, like those of y'all that are learning it, he'll even say, if you've gotten to that part yet, all you need to do is watch one thing. If you find one thing that I say, one of these PD arrays, and that sticks out with you, and you can see that when you turn the chart on, stop. Don't go no further. You don't need to learn all 10, 12, 15 different things to see which one works the best. What you see first, if you can see it and trade it, stop in your tracks and don't learn nothing else.
All right, I'm back up. So I wanted to share really quick before we get off, just kind of, and my chart might look a little different than everybody else's. I remove the emotions. The red and green are emotions, so I remove it all. So it's just pure price action. So I make everything white. And it helps me focus on the movement instead of, okay, this is a green candle, this is a red candle, or whatever it is. And then two, I try to keep my chart clean and not have a lot of indicators or anything on it. So I'm just looking at pure price action and levels. And what I like to, okay, you got it. All right, buddy. What I like to do, okay, all right, buddy. Yeah, I'm trying to show something. Okay. What I like to do, like I was saying, is like essentially with the chart, I'll find the trend. Essentially, I'll go from daily, and then what I like to do is I like to stay on the 30 minutes. And so, depending on what's happening, I like to find where those order blocks and imbalances are. So if we just like randomly go back to like,
Hey, Ace, can you close your watch list, please?
oh yeah.
Thank you.
So if we randomly go back to like to a random day, like what is it? Thursday. Actually, we'll start at the week, end of the week. On July 15th. So if we randomly go back, you can kind of see the trend overall, right? Because we've already went through it. But if you're looking at like Monday, and you can kind of see like we had a liquidity grab there, but then we have a big imbalance candle that we go up to kind of an order block zone. And essentially that order block is where the candles start to reverse, and then now you start to have distribution to the downside. And so in this case, from Friday, we had some highs at 20,700 something. And so if this was 2 o'clock, and then we had distribution down at the end of the day. And then coming on Monday, you can kind of see how we grabbed that liquidity, immediate shooter candle down on the 30 and continued down. This is like a little bit of chop. So this is actually probably not a good example. Then Thursday, let me find an example of, okay, so this is actually a good example of that 30-minute ORB. So we have, and so depending too on how big the 30-minute candle is how I'll base my size. If the candle is a little bit smaller, I might size up a little bit heavier just because I know whichever side it breaks, there's going to be more range. If the candle is super huge, I'm already thinking retracement, because if I try to, be super heavy, then it might get my stop just from like retracing 25% or even 50% of that 930 candle before maybe going in my direction. And so what I like to do is if it's a super huge candle at 930, I'll size down maybe 1 or 2 contracts. If it's smaller, I might size up 3 or 4 or 5 or whatever, right? But for this example here, this Thursday candle, you had a 930 candle, high 2149. The low break was 20,019, right? And then that 10 o'clock candle, we closed this 930 candle at 2067. So this 10 o'clock candle opened up within that, right? 2068, 20,068 or whatever. And so we were trading inside. And so you're really waiting for that break. But as you can see, we kind of shot down, kind of like a little shooter. And then right at the close of this 10 o'clock candle, which was 2046, 1030, we opened at 20,046 and then just took off. And so we're still waiting for that break. So once I saw that, because we still had that level in our mind, 2019. And so once you see that break, then you take that and you can see that we just went down that's like almost 200 points right there in 10, 15 minutes. You see Wolfie? I see it. Does that make sense? You're waiting for that break. Now there's occasions, like I know there was one occasion where it didn't work out. Where was it at? It was this week. And we got chopped up. I think it was here. Yeah, so it was actually Friday. So you had the 30-minute 930 candle, and then we essentially peaked both ways. So if you go down to like 5 minutes, actually let's see what that was. That low was 19,060 and 19,1, essentially 160. So if you go down to the 5 minute, you can kind of see where we just chopped, and you would have essentially got we had this 930 low there, and then right when 10 o'clock hits, we peaked above the high and then immediately came back down. And so if you would have took that high break, of course you would have had your stop loss in place, maybe like at 50% of that 930 range or whatever it is based on your contract, but you would have got stopped out. Right? And then if you were like, all right, I got stopped out at a good amount because you were planning on it with the stop loss. Then if you were like, okay, I'm going to take the bottom range of that 930 candle, we peaked below again and then it came back up. And so that's an example of just kind of the strategy not working. Of course, it's not 100%, but where sometimes you'll get a peak and then we'll immediately reverse. So just making sure you have the correct stop loss in place and kind of sizing appropriately so that it's not, you're not having too big of a loss. You guys have any questions on that?
So when it breaks for the 30-minute orb, when it breaks, are you waiting to see what it's going to do first, or are you just getting in?
It depends on. So I'm watching the whole time. I'm watching from 9:30 till 10. But hold on, give me 1 second. Essentially, I'm watching for that break, but depending on how price action is looking, if it's looking like it's passing through that level with ease and with volume, then I'm taking it immediately. But if it doesn't look like it's doing that, then I might wait for small retracement on like the 3-minute or the 5-minute or whatnot, and then let's see if it like tests that low again, that break again. Because sometimes what it'll do is it'll break it, it'll peak out, it'll come back and retrace 20, 30 points or whatever on NQ because it likes the wick, and then it'll go in your direction. And so sometimes that retracement right after the break is what can grab your stop. And so sometimes I'll wait for that. But if it doesn't do that and it's just, pure volume and we're breaking through that level and we're just continuing down, then I'll get in and just make sure I have a larger stop that can kind of withdraw that drawdown without getting triggered. I keep it simple, essentially.
I like it. We back tested it on our last chart and chill. This past week I used it 3 times. And I definitely agree with you. We came to the conclusion, yeah, it's a blind trade, but if you go back to the smaller time frame, you kind of could know if you should stay in or if you shouldn't. But essentially I like it just so like if I did my working analysis on one pair, I'll like just do the simple of high and low of 30-minute strategy on another and I get in, and that's how I'm able to even add more to my profits on and not even doing that much analysis. So thank you for sharing it. I've used it and I like it so far.
Yeah, and the thing
I do
too that
see
I
how
like
you
to
can get
do
burned
is
though, but yeah.
what I like to do too is most of the time I'm shooting for a specific point range, 20, 30 points or something like that, depending on how many contracts I have. But sometimes if you want to just kind of let it ride, like I think the week before it was just money every day. I got you, buddy. Because it was we were just going down, we were just tanking, right? And so what you can do is if you get in And even if you hit a certain point range that you were, aiming for, that you typically aim for, instead of taking that, or you can take some off the table, but instead of fully taking it and being out, you can have some runners and then start to move your stop loss with the trade and see how far it goes. Because if it doesn't break structure to the upside, you can essentially squeeze out another 50, 100 points, depending on what's happening.
So do you mainly use it for NQ or you use it on others?
So I've been in the ghetto for a little minute with Lucretia, but it can work on ES too. It's just ES is a little slower moving, right? And I mean, it's just smoother price action, but it's a little slower. And so I'm typically trying to get done early, so I'm not in front of the charts all day. So I'll typically maybe 80% of the time use it on NQ. And if it's not triggering, or price action is looking a little too choppy, then I'll just drop down to like either the 15-minute or sometimes I'll do the 3-minute opening range breakout. Like the last trade I did was actually the 6 p.m. EST open. And it was, my mindset was essentially because we went up, crazy Friday until lunchtime, and then we were just retraced and sold off and essentially went up 400, 500 points and then sold off the same amount. And so we closed the day to the downside. And so my thought was like, all right, the market's going to do whatever it wants to do, right? But my thought was like, okay, it makes sense to have some type of retracement, especially since, the market loves to go from liquidity to liquidity, right? So I was like, 5:30 or 5 o'clock, we close to the downside. 6 o'clock, the best risk to reward, in my opinion, will be to the upside because people are going to pile in and they're going to kind of push this thing back up. And so I didn't want to be in the trade too long because I didn't know how much volume we were going to have. And so I waited until the 6 p.m. open. And I saw within the first 30 seconds, we went from, I think the level was 19,000 to we jumped up on NQ 15, 20 points in the first 30 seconds. And so I was like, all right, I'm taking that. And I entered at 6:01 at 9:15 or 9,015. And then 60 seconds later, we were at, 32, 33 or whatever. So that's 15 points in 60 seconds. And it was based off of just an open range breakout on the 1 minute. So it's just whatever time frame you want to use it on, taking advantage of that volume and that initial that volume and that initial price action essentially. But the higher the time frame, of course, the bigger the move. The lower the time frame, you can kind of get chopped up if you hold it too long. So if you're doing a 1 minute, 3 minute, 5 minute, you don't want to hold it for too long because you're on a small time frame. But if you take it on a trigger on a 30 minute or an hour, then you know that your move could be a lot bigger. You can hold it longer. Yeah, Lucretia be having the green shirt on every day. You don't watch it.
Thank you.
There's one other thing I can probably share too. Just like I said, I keep stuff simple and look at imbalances and order blocks. Let me see if I can find some on the chart. What I like to do is find those extremes. And so just like looking for a large, like this one. Typically, what I'll look for is like we have like a large imbalance, right? And so we have a little bit of chop. This is on the 30 minutes, so a high time frame. We have a little bit of chop, which this would be essentially an order block zone or whatever. But have like this large imbalance, and so what I'll do is I'll probably consider this imbalance to the downside. Price goes lower, and then what price likes to do is to grab that liquidity. Once it grabs high side liquidity, it may come up and try to get this top side liquidity here. And so what it'll do is you'll always see price try to fill at least 50% of what an imbalance is. And so you have this large imbalance candle. We came below. We were chopping around. Took that both sides liquidity real quick and then bounced back up to about 30% of what that imbalance was, right? And so then this is what's left. So we came down and then we came back up and took the rest of the imbalance zone, 50%, then came down. And so kind of training your eye to kind of see where some of those balances are, where like an order block is located, like this one here. We're chopping around. You probably consider this small order block for small order block zone before price started to go to the downside. We took liquidity down here, and then this is actually another order block here, where price simply took through that, distributed down, right, and then came up and started to chop at that zone. Came down again, took liquidity down here. You can kind of see, you can draw these all over the place, all right? But it took that, and then took low side liquidity here, came back up, bounced at that level. We bounced at the level for a good minute, and then started to come back up. This order block, probably, yeah, that order block didn't get filled yet. So now this could be a level where if we took both sides and started to come back up, this could be a level where it can be like a resistance zone. So I try to see some of those patterns every day in the chart. You can kind of find them on 30 minutes, 15 minutes, 5 minutes. The bigger the chart, or the bigger the time frame, of course, the more solid that support or resistance zone will be. But you can kind of see those everywhere. That's all I got for you guys.
Can y'all see?
Yes, sir.
I know some people, sometimes we have directions, even myself, as far as direction wise, trying to decide what the direction is. Um, I know I posted in the chat one time. I think somebody else did, like previously before I did. It's just understanding what the daily candle is doing. So for YM, it was a reason why it shot right back up compared to this one. It didn't take the liquidity. I think that was the day that we thought YM was going to take previous day, and it did not. So what you want to look at or have an idea of, girls, girls, thank you. Want to look at exactly since this, or let me, that candle there wicked up, or actually, let me get it bigger so you can see it. So we know for this day, Wednesday, I'm not going to, or I know for myself, I'm not going to take any trades that's going up. I'm going to take all my trades going down. Unless we're in some type of high key point level, like a same time frame, fair value gap or order block, then I'm going to continue to take all my trades down. This one closed a little bit under, but it still didn't sweep the previous day. Really tiny, but didn't sweep the previous day, and we just continue to shoot up. Then not only that, for Thursday, so we closed Thursday without the body being down here, but we still ended the day bullish. So I'm looking for this to be taken out on Friday, and exactly that's what it did. If I was trading YM, but I didn't trade YM. This is just an example of what to look at, or have an idea of what to look at. That way you don't, you kind of try to stay with the trend. So for Monday, I'm looking for this to be swept, where it could possibly still go back down or continue to go up. I'm not looking for it to come all the way back down here. Seeing we don't have any crazy news on Monday, I think most of the news starts around. Hey, how do they have this little box thing up here? I could barely even move it. But yeah, I'm not looking for it to come back down here to sweep this. Now you do have this here, which it hasn't even touched yet. But if it does come up and does sweep, then you still have an idea. Because also, if you're into ICT and PD arrays, that's an order block for the day. So that could also push us right back down. Same concepts that I look at. That's just the daily. We start on the week. We see a lot of wicks on for gold. But also we can see why we shot right back up on gold. last chart and chill, I said I believe we're going down. We did exactly that. That's the week. But what we go all the way down to, a weekly fair value gap that's being respected. It's tiny, but still being respected. And shot right back up. Unless somebody's swing trading, we're not worried about where the week is going. We're about where the day is going.
I win. That's a win.
It gave the idea to go shorts.
Oh, I got a win.
Since that gave the idea to go shorts, I'll be looking for this one as well to sweep it and close below it. But it didn't do that because of the weekly high time frame PD array. It also created an inside candle. So with that, you have accumulation. Yeah, you can still make a profit, but it's not like how it'll be trending to hold much longer. Another thing, I think on our last call as well, NQ, famous NQ. What I've noticed with backtesting, this was my last entry or my last trade yesterday for NQ, minute chart. Yes, I do take entries off the 5 seconds. My minute chart has a setup. Standard deviations, that's what I use. This is that market structure shift here. I'll wait for the next candle. This is what this yellow line is here to indicate, okay, wait for that next candle, because sometimes once you make a market structure shift, you get a retracement back into that range. And it did just that. It's tiny. That's entry right there. And I automatically have a 40 tick stop loss. So with minis 5 contracts, that's $100 which it never even came close to it. So if that's my entry, right? Once we get a breakup structure, now I'm at break even. Once we get another breakup structure from here, now I'm moving my stop loss to the highest point here. Since I always aim for 3, the -3, it hits my target. There's no reason for me to get out because I got in off a market structure shift. The 1 minute did not create another market structure shift to come back and take my trade out. Or let me say a bearish market structure shift to the downside. If it create a bullish market structure shift, then I'll be more cautious to actually get out the trade. Anybody have any questions or don't understand the concept? So I would say, far as like, I know everybody's not ICT. This helps me with not moving my stop loss every time, just watching the candles. Oh, it's coming back up, it's coming back up. But then you get wicked out or you get stopped out and then it goes to your target. Now you upset because you moved your stop. It's happened to all of us. You can't say you a trader and say that has never happened to you, ever. So if you're entering on the 5 minute to the downside, unless it creates a market structure shift that's bullish, stay in your trade. Every time it makes a breaker structure, okay, cool. That's break even. It makes another one. Okay, cool. What's the next highest point? That I can move my stop down to. And if it continues, okay, I keep moving my stop down. Not once did it create a market structure shift to the upside to say get out this trade until you got right here. But it still failed. But I mean, I was already done. So that's a way to help stay in. And yes, do not once you enter, do not stay on that time frame that you're entering. Because of course that came back up and then, it's gonna take you out. Or you're gonna get anxiety and fearful. And you have to let the trade cook. Unless it's gonna displace immediately and go to your target, you have to let the trade cook. And I'm not trying to hold all day on NQ. NQ to me is scalping. Sir Brown. Yep. There's no reason to get out. Every time you hit a break of structure, it's gonna retest that area somewhere. It's gonna retest it. Even tested it here. Came right back up. It didn't close above this, but NQ's famous for wicking you out and then continue to run. Break structure here. Came back up, tested it, failed again. If you want to include this one here, came back up, tested it, fell again. Back test it, see how it works out for you with your entries. Because also this will help me stay. Now I'm not Ashley. Kudos to you, shout out to you, Ashley. But also when you're in that trade, you want to be relaxed. Avid, the breathing techniques, they do work. I typically try to work out before I enter trading to at least like ease my mind. But I want to get in a trade. Okay, if it comes back to my stop loss, I'm not just completely upset. It happens. But that's what, we backtest for to get a better edge on, okay, what are we doing when it comes to this market? What are we looking at? How are we analyzing it? When I take a trade, it's because I have my setup in place. If it goes against me, I still took my setup. So I can't be mad at that. However, whatever and however it takes for you to get in a trade and just be comfortable with your trade, regardless if it's a win or a loss. That's what we should be all aiming for. Because trading is already hard enough. I don't know how much money I lost. But just some things to look at to keep it simple. Keep it simple. If anybody wants me to go over another chart or if anything else, just say so or even ask.
I'm curious on what do you do when you are on the second time frames?
Like this one? Or you talking about this one?
Like like the 5 second, 10 second, 15 second. You would just get your entry and then go back to like 5 minute or something or 1 minute.
Yeah, because my 1 minute has to set up.
Yeah, okay. And then okay.
So yeah, after the seconds, after I enter on the seconds, I'm not worried about it anymore.
Oh, okay, I see. Yeah. Okay.
Because if I was worried about that, and then let's say if I move my stop to here,
Mhm.
because we had that break of structure here and then here, and then you have another one here. It came back up to retest all that, and it also starts to change structure.
Structure off in here.
Yep, market structure shift. So yeah, I would have been put out. And then to look back at it is like, okay, if I would have stayed here on my setup, then clearly you can see my entry was here. It never came back.
Yeah, I've been finding comfort with the 15 seconds, 30 seconds. Those is what's on my time frame charts, but I'll go to the other ones, but the 15 and 30 is it.
Hey, whatever gets you, your joy, Ashley, because I mean, you get in early, so and you sit and wait. And I was like, oh, I don't know how she do it, but she do.
Not moving my stop.
See, that's a thing though, because we know NQ, it's like these candles shoot up crazy, and it's like, oh, I gotta move my stop. I gotta move my stop because we think it's going to come back and take us out.
Yeah. Yeah, and Q takes liquidity a lot. Like even yesterday when I was in those buys, that was my second buys. The first one I came in with like a tighter stop, and the second one I didn't have a stop, but it was a mental stop, which is crazy alone on NQ. And that's why I switched over to YM because NQ, like even though you're in a great demanding area, because my entry was 19,056, I think, and the low was like 1940. I actually even had a limit order at 1938, but it didn't get tapped in on my second one. But it came to that area like 4 times on the 5 minute. So you just gotta sit
You
in.
said 1940.
Yeah, let me see.
Oh yeah, okay, yeah,
1940 was the low. I
yeah,
had a limit order at 1938 though. And it didn't tap in with that 1940 wick drop. So just looking to the left on the 5 minute, that's what gave me that area. Yeah. So, but yeah, like it comes and take liquidity off. It
hmm
builds liquidity a lot um, more than YM does. So,
that's another thing. Once it, I've noticed also once it takes liquidity somewhere and it taps into like a higher time frame PDRA, we're more likely to go the opposite direction of the next highest liquidity.
exactly. Like YM, yeah, sometimes you could get the triple bottoms and triple tops for the build of liquidity, but
Hmm.
sometimes it'll touch it and go. It stops out everybody with a big because YM it could do 100 points in a 1 minute candle. It stops everybody out with 100 points drop or up move, and then it goes. In
Right.
Q, like it just keeps on doing it over and over. So. That's why the second time, the second time just to avoid my loss and then just to stand on business for knowing that I'm in a key liquidity area, I just went in with stop on the second after getting stopped out on the first one. And I had a better entry. So
Yeah, to see this, what's this around 130? Oh yeah, that 130 drop. Um, maybe it looked better on 1 minute or gave some type of entry on the wall. Yeah, because on that 2 minute, that wouldn't have worked for me.
Can you open up that screen, Omar?
Yeah. So, yeah, if anything, I'll be waiting for, since the close here, I'll be waiting for this candle to see if it'll retrace. If it doesn't retrace, okay, I'll just find a entry somewhere here. It didn't really give one on that 30-second. And I have different time frames as far as the entries, depending on how it looks. Like I can barely see anything on the 5-second for that. Maybe at that time when there's actual volume, it looked better, which it does. Kind of an idea. So 10-second. So it's probably an entry right here, but I mean, that'll be to me, that'll be too late because you're already in a rejection area. To me, I mean, the trade would have still went down, but I wouldn't take it this trade. Let's say on a higher time frame. Yeah, if you got into this retracement on the 5-minute, that would have been better. Of course, you would have had a bigger target. But yeah, came back up from the rejection area. So yeah, that gave you a better outlook. Um, these pullbacks are crazy, but yeah, once you get an entry, kind of back test it yourself to see, and just hold your trade and see what it will actually do. Like I know we can go over what we saw during that day and what we failed to watch. I mean, we're supposed to back trade that anyway, but just pick like a random day and then try it out. Look at the key points or the key areas for that day. Depending on what you use, whatever your strategy is, and then try it out. But unless it's making another shift that to go against you, there's no reason to get out that trade. But I will say sometimes it does do another market structure shift to go opposite, but it'll still fall. For instance, this one you may consider to be a market structure shift to the upside, but also you're still in a 5-minute PD array to continue to go bullish. I mean bearish. So that's something to also look out for too. If it does start to go create a market structure shift opposite against you, then look out to see where the repeater arrays are. That's why I said if it does create one, I'm cautious, but I don't want to get out and then it continues to run. Yeah, I'll get out with some profit, but I want my target to be hit. What was it that you want me to say again, bro? All right. Do y'all want to go over something or we good?
I had a quick question. It's in the chat, so you can ignore it if you come to it. But when you were saying that you move your stop to like the point where there will be a market structure shift, do you do the highest or the lowest
The
swing high?
highest. The
Okay,
highest.
thank you. Okay, thanks.
Mhm. And I don't know what everybody's goal is as far as when they're in the trade. I don't know what they're looking for. It could just be it could be liquidity. It could be um a certain amount of points or ticks. I know for me, once these standard deviations are up, I'm looking for this -3. Also, depending on, let's say, like how was in a say we're in a uh or we have a day of a lot of seek and destroy or inside candle or accumulation on NQ or anybody, I might just only aim for -2. But majority of the time, I'm aiming for that -3. But I've seen it too many times. You come -3 and you shoot right back up, and then you may come all the way back down. The weekly outlook. All right. Can y'all see the calendar?
Yep.
So we have nothing for Monday. I may not be trading Monday as well. It's my mother's birthday, so Tuesday we got a lot. Or not Tuesday, but Wednesday we have a lot going on. A lot. Thursday, not so bad. Friday, so we have news every single day except for Monday. See how we ended. That's the day, the week. Expected the fair value gap. So if it holds solid, looking to take this out for the week. Or yeah, it can close above it or at least sweep it. But looking for it to head in that direction. Let's say we start off here, come back into this area, but we don't take this out. That's going to be your swing to the upside for the week. So whichever days are lowest, I'll say come back to the week and then see if we had a wick. If it could be lower than this one, but as long as it's not lower than this one, we're good to continue to the upside. That also being said, since we closed here into the body, I'm looking for the next day to continue to push up as well. It's good to know. Y'all give me a second. Let me go handle my daughter real quick. Um, where was I? So the day. So we're already in a feed already. Everybody got to the downside. So we could sweep this here and then push back down, or we could just push back down first, then finally go to the upside. But you have both of these to get through before you take out that high. So it looks like on the hour. You're already in a, or you already tapped the 1 hour order book. So if this comes back down and closes here, that right there, I'll be looking for that to be a market structure shift to the downside. One thing with that, you have this here as far as the fair value gap. Um, like I said, depending on what time frame you're entering on, let's say it does create a 1 hour bearish market structure shift to the downside. You can use this as a target to get out. You can use the 50% as a target to get out. As long as it's not creating a market structure shift to go opposite of you. And if it is creating one, what are the key levels or what is it in? Like, is it in an order block? Is it in a fair value gap to continue to push it to that downside on this specific time frame that you see your setup on, or you're taking entry on? Or if you're taking entry on the 5, then you may have gotten your setup from a higher time frame. If not, then if everything is aligned with the 5 minute that you're taking entry from, or what you're seeing as far as your lows and your highs, then cool. But as long as you're not seeing a market structure shift to go opposite of it, then stay in your trade. Stay in your trade. If you do move your stop, let it be moved into profit. We're never going to, I know people say like remove all emotions. There's no way. But if you can have control over it to where it's not psyching you out immediately or intentionally just move my stop because it's finally pushing down, unless you're scalping, stay in your trade. Have some type of calmness about it because you believe in your setup. That's why you took the trade in the first place. Other than that, um, that's what I got for YM. If I see something else, but of course, I do hope that you do mark up your chart as the day goes or price action goes by. That way you can see exactly. Oh yeah, we can go to Russell. That way you can see exactly what's going on because I didn't mark up Russell. Actually, let's go to it. I didn't mark up Russell. I think it was this. Yeah, I didn't mark up Russell for Wednesday to see exactly why we rejected here on Monday. So when I took my trade to the downside, it went right against me. It created a market structure shift to the downside on a 2 minute and went right against me because we were coming from this. We already swept the previous day. We already swept it. So that's indication right there. We left the PDRA or the weekly. I mean the daily. And I didn't mark it. So I deserved that. Not saying I deserved that in a bad way or like, beat myself up. I wasn't mad about it, but I was like, okay, why didn't it work? So I had a back test, and when I back test, I didn't mark this up. But since we're gonna talk about the week, so Russell gave the indication last week that we were not going down. In optional world, strat world, you gonna take this to more likely go down. Yeah, it's a shooter, but we still closed bullish. Now, if we close bearish, then yeah. So, um, and it's crazy because it was an inside week, but it still makes some good moves. That'll be the target I'm looking for, of course. Um, I don't see anything. We have this weekly one here. So yeah, you can barely see it. Let's see if we can make it bigger. We closed on the body, so I'm looking for it to continue to the upside. Regardless if it sweeps or closes above. It might hit this target tomorrow. It may not. But I am looking for a sweep of the previous day. I don't like how this hour looks, but still doing the close on the body. So still could push it up, but also if you're really advancing to ICT, then you would know this could possibly be a rejection block. I'm not really into that, but I know of it. So if anything, I'll just be looking to see what it does. Just mark some liquidity levels. That's what I'll say. I'm really not into it. I just know of it. So you got quite a bit of levels to the downside. Or first, or to me, it has another reason why it should just sweep it and then come back down. But we'll see. But you still have levels to help support around this area if you want to be crazy about it. We're still on the inside on the 2 hour, or we're still in that range on the 2 hour, 3 hour, same type. 4 hour, of course, the same thing. Oh, another thing, if you're into the accumulation, manipulation, and distribution, look at the 6 hour. You get an idea of things. Accumulation, manipulation, distribution, reversal. Accumulation, manipulation, distribution, reversal. Those can help with the quarters, kind of help you with your setups. Just go from there. Other than that, anybody have any questions? Cool.
Does anybody have any more questions or anything? Thanks everybody for showing up today and sharing their charts. But does anybody else have anything else? Okay, doesn't look like it. So we'll go ahead and end the Zoom. Everybody have a great weekend.
You too. Take care, everyone.
Thank you.